Hello and welcome to Weekend Investing Daily Bytes. Today is 26th of April and we're shooting episode 217. We're going to talk about how we usually try to apply logic in the market and most of the time it doesn't work. I'll show you some use cases and samples of several stocks where logic defying moves happen at all times actually, and our effort normally is to try to put some logic, some explanation to the price moves where there may be none actually, because so many variables and factors are driving the prices, and we want some explanation to justify that price to us. That may or may not be the right way to look at a stock price, so we'll discuss about that. The market opened gap up after some vicious down days. We are pretty much in a gap everyday zone. In the last 6 days we've had 6 gaps. We are pretty much dancing to the overseas cues that are available in the morning. Domestically nothing has changed. Domestic investors continue to buy, foreign investors continue to sell. Results that are coming in are, even if they are better than expected, I have not seen too many stocks go up post results, so it does seem like the market has discounted most of the gains that are expected from these results. Also, another thing that you may notice is that during a result season, markets usually stay range bound. So I am, for example, in the next couple of weeks, if you ask me personally, I'm not expecting any major moves to happen, and we may just bob around a couple of 100 points here or there unless we get a very dramatic overseas cue. So there is no scope of any disappointment in results. If any result is coming which is a bit disappointing, that is getting very dramatically thrashed, but good results are being met with very okayish kind of stock move. So it does seem like a lot of things are discounted. Today's move, we saw reality, autos, energy, PSU banks, consumption stocks do very well. The Indonesian palm oil export ban seems to be not encompassing palm oil as such. That caused a uptick in FMCG stocks. IT is trying to make some comeback, but it is still the weakest sector out there amongst all that we track. Banking also was limping back up. Overall, a decent bounce day. Nifty did quite well, 1.46%, and primary sort of leading the rally is Reliance Industries, with huge margins to play with the cheaper oil that they're importing, and their refined oil is having better and better margins. The next thing that I wanted to discuss today was this. A small case is actually changing the index series for all strategies. What this means is that the index series that has been calculated since the very start of these strategies at a base of 100 was at certain level till yesterday, and because of users' feedback to small case that strategies take Friday close as the buy or sell price, and we are not able to buy or sell at that same price, and we do it on Monday, for instance. So there is a gap between users' performance and this model strategy performance. So to bridge this gap, what small case has done is that they will now take a average of the open, high, low and close of the next day of the model portfolio transaction. So for all weekend investing strategies which are Friday close basis every week, the model used to assume Friday's close, right? And you were buying on Monday, whether in the morning or in the afternoon or Tuesday, whenever you would want to rebalance. Now what will happen is that the model portfolio will consider the open, high, low and close of Monday, take the average of that and consider that as the model input. So any stock which gets bought on Friday in the model will actually use the average of open, high, low, close of Monday as the model. So you should be able to replicate the model returns either on a one-to-one or even better than model returns actually at times. So all this index series has changed. Nothing changes for you in the sense that your performance till date stays the same, whatever it is, and from here on you will be able to better track your performance versus the model. And all this has happened essentially due to the feedback that lakhs of users of Smallcase has given them. The Weekend Investing Hub, which had the series of all our strategies from the very beginning, requires a huge updation now because all these series have changed. So we will take a day or two to update all that, and once updated then you will be seeing the current index on it. In your Smallcase app you should be able to see the current index of your strategy already, and on the Weekend Investing Hub we will see it by tomorrow hopefully, or maybe day after tomorrow. So I hope everybody is clear about this, that there is a new index series calculation method by Smallcase, and it will use the open, high, low, close of the next day of the model portfolios transaction, and that will help in users getting the same price as that of the model portfolio. So top gainers for the day, Mahindra CIE, we are seeing that it is gaining almost on a daily basis. It was in the top gainers yesterday also. Gujarat Alkali, very, very strong. We have this in some of the portfolios. Bombay Burma, 8.8% up. Network 18, we are holding plus 8% up. Adani Transmission, of course, we are holding from very long, 7.5% up. Huge gains on mostly, on almost all Adani stocks. I mean, Adani, I think on a global wealth basis, Mr. Adani was number 5 till yesterday, and he moved to he was 6 till last week, and then he moved to number 5, and I think with today's performance he might as well be number 4, and who knows, he may go further up. So all the best to him. Future consumer, future retail, crashy like several days, 13% and 5% down. G Shipping 5% down. Gland 5% down, and Atul after poor results also 4.5% down. There have been weak cues from overseas markets, but just look at how Nifty and Sensex have been holding. So these are index returns year to date, almost 4 months in. China is down 20%, USA Nasdaq is down 18%, French and German markets are down 10 to 13%, Japan is down 9%. US Dow Jones is down 7%, and we, after today's run up, I think we are somewhere close to 1 to 2% down. So in terms of global performance comparison, we have done really well. We should be thanking our stars that this retail and domestic liquidity push has saved us from this massive FII sales that are still continuing. And hopefully the timing will be such that when the domestic liquidity dries up, the overseas liquidity may come back again. So, we may get a very nice cushioning as and when that happens. So coming to the small topic of the day, market always Defy Logic. So this is one stock Veranda learnings. Since its listing, it has just been going up every day circuits. So I remember at the time of listing, a lot of talk was there that this is already very expensive and so on and so forth. And today there is news about more acquisitions and so on and so forth. So you never know where this is going. So again, what I'm trying to get at is, don't get fixated by the narratives that are usually there in the market. People try to put some valuation logic or some industry average logic or some other logic to why a stock should not go up or why it should go down. Usually does not work that way. I mean, it is basically the flows, the demand and supply of buyers and sellers, which determines where the price will come to an equilibrium. It is just like any other commodity. It's just like potatoes and tomatoes. The demand and supply basically determine where the price will go to, and those demand and supplies are driven by short-term phenomena, short-term moves in the market. If there's a trend of money gushing into India, regardless of fundamentals, almost all stocks will go up. Now we are seeing, regardless of all fundamentals, FIIs are just selling every day. So a lot of these logics which we want to justify to ourselves actually don't work. But because we are in our human brains, we want to associate a logic with a price, that why this is 220. So we want to put a logic, and then our brain says, okay, so this must be right, the logic fits, so on and so forth. And the classic example is Adani stocks. Last year and a half, 2 years, it's a mind-boggling run. I don't know whether this is sustainable or not, and I don't really care about that part also. The fact is that a large number of people had a fixation that Mr. Adani or this Adani group is a fraud group, or this will not last. It may happen. I am saying you may still be right. It may happen. But you've lost a huge opportunity for a run-up. You could have bought and you could have sold. You don't have to marry the stock. Never ever think of that. So, I mean, just look around you. There are stocks that have not moved for 7-8 years. And there are stocks that are just going double, triple, quadrupling all the time. Then there are stocks which have been doing very well, which are just crashing, and nobody really can put a finger on why that is happening. Alibaba is, like, for example, one good example of that. And many other stocks in our markets also. So my sense is always that, don't try to put too much logic into stock prices. Follow the momentum. See that you are following the price, and Bhav Bhagwanche will keep you in good stead. It will take you out of troubled stocks early. I'm not saying you will not make a loss. Sometimes you will make a loss, but you will not be in pain for a long time. And I think that is a very big advantage a momentum investor has over a conventional investor, that his pain is much lower than what a conventional investor has to bear. And the returns, I don't see a lot of other conventional investors making returns much higher than what we have been doing in our momentum products. So if the gain is similar, why should we bear more pain? I mean, that defies my logic actually. So I will always promote that you find the right way of approaching, a structured way of approaching stocks. Just see Adani Green, we bought I think somewhere below 100 rupees, and it has reached 2,900, something like that. Several times we've removed it, added, so on and so forth. But there is no judgmental call on this stock, that I think that this is overpriced, or I think that this is a fraudulent company, or I think that this will not sustain. There is no judgment. I'm saying, Baba Bhagwanche, let the price tell me what to do. Adani Total Gas, again similar. I remember at this point, everybody gave up. There were other I don't want to name anybody, but many managers actually did a rebalance at the mid of the week, getting scared out of these stocks, and it went up again. So never ever break your rules. If a stock is crashing and you have a rule to wait for a rebalance on Friday, please don't break that rule. Another insight that I wanted to talk about today was about scale. What happens is that, like in this example, you have a 10,000 rupee capital and you lose 2,000 rupees on it. While that's a 20% loss or a gain, it doesn't seem too large. You come with that mindset that, I'm putting in 10,000 rupees in the market, maybe it'll go to 20,000 or it'll go to zero, something like that. The same does not happen when let's say you have a capital of 1 crore. You may lose 2 lakhs and it may only be 2% loss, and that's okay for maybe that strategy, but that 2 lakh absolute amount may play a havoc on your mind unless you have transitioned into this scalable thing in your mind. So a 20 lakh rupee loss on 1 crore may take you away from the market totally, whereas a 2,000 rupee loss on a 10,000 rupee capital may still not dent your confidence. So what we need to do is to first is able to scale your strategy. So devise strategies or design strategies which are scalable. What you may do on a 1 minute basis on a bank nifty futures or a call may not, and it may sustain for 5 lakhs or 10 lakhs of capital, may not sustain for 5 crores of capital in case you want to go there. So your strategies will need to be designed accordingly, or maybe you will have a plethora of strategies running for each so and so. And that's true for investment also. I mean, why do you think large pension funds are not there in India? Because with whatever depth of the market that we have today, if they try to buy 1% of their capital in any stock or a bunch of stocks, they can't get that much volume, and they can't get out then. So you have to play the market according to your scale, and if you are starting in the market or if you're running in the market, at least plan for 5-10 times of scale and be hopeful that you will reach there within a few years. So the idea is that you must scale and start to think about the market in percentage terms and not in absolute basis terms. Only then you will be able to scale very high and not have a vertigo that, I got a 2 lakh loss or a 5 lakh loss today. I mean, if your capital goes multifold, then all that is just percentage change, small change in your entire thing, and the absolute number will stop to haunt you when you think about it that way. So this is all I had in today's daily bite. I hope you're liking this effort that we do. My team actually puts in significant effort in making this and trying to share whatever little insights that we do get on the markets. And also I would request you to please share this channel along with your friends and family. We would like this knowledge and this information to reach as many as possible. Not necessarily they need not become weekend investors, but any bit of sharing of knowledge that can help people make better decisions, I think we should do that as our good deed for the day. So please keep doing that, and I'll see you in another video. Bye.